Welcome back to the Steady Trade Podcast, everyone. I am Tim Bohen, back with Matt McCall. Hey, I want to start out real quick. We're about a month into the relaunch of this, and thank you. I think we have had, I'm going to jinx myself. Now the haters are going to come in, but I think we have had 100% positive comments, whether it be on the YouTube or podcast. And I got to thank you for the DMs on social media, etc. Really cool to see. As I mentioned, kind of back in the original relaunch about a month ago, we kind of had, Matt and I got together, had this idea, but it will be an evolution. Ideally, the podcast will be a moving and shaping thing, and will grow and change based on what you guys want to hear. But that being said, just really pleased with all those comments, and again, negative comments, bring them in. Hey, I'm not scared of haters, but it was just neat to see, to go back and look at on YouTube and stuff. Everybody really seems to like it, so I appreciate that. Thank you for all of that, everyone. And that being said, let me kind of get right into it. The topic of today, I was reading a Wall Street Journal article, I think it was last weekend, and it was basically, the headline was, "No one wants a new car anymore." And it basically, and we got some trade ideas. Well, I really like the trade idea we're going to talk about. A little bit higher price stocks, but I really like it because of what we've seen over the last few years. And I think there's a lot of people out there that are just like, I don't want the government telling me what car to buy. A lot of these are overly complex, and they're expensive, and all of these things are kind of weighing on people that are like, I'm just going to keep driving my car I have. And one thing I do want to mention, and I've made this very clear, understand, my friends, that there are Teslas and there's everything else. Okay, so that, and I don't know if Matt shares that opinion. I'll let him speak. But to me, when I talk about EVs, okay, I'm talking about the junk that Government Motors is making. I'm a big, everyone knows what a fan I am of Government Motors, okay, and Ford and all of these that are just rushed together, in my opinion, junk, just because they want to take the subsidies, they want to be in favor of the politicians, etc. So as we talk about this, there's Teslas and there's EVs. So when I say EVs, I basically mean everybody but Tesla. Okay. So anyway, I just know a lot of people that I know that are just like, I'm just going to keep driving my same car. And just so everyone knows, and Matt, I don't know if you know this, so I have a problem with collecting Toyotas, but I tell you that 84 4Runner still runs like a top. So that's what kind of got me thinking about this. I'm just like, man, why would I go buy an EV when I've got way too many Toyotas? But there's zero maintenance costs. They're all paid for, and I could literally drive them forever. And now I'm taking the chance on an EV. I got to deal with the charging stations, et cetera, and the quality. I think the quality chicken is going to come home to roost. So anyway, sorry, long intro, but welcome back, Matt.
Yeah. No, it's a great story. It's funny. We're alike in many ways, Tim, but this is one way we couldn't be further apart. I really haven't owned a car personally in my name for 15 years at least. And I didn't have a driver's license until about 2 months ago. That expired 7 years ago, 2017, from New York City. So yeah, I'm not a car guy. I loved researching this topic. I think it's a great topic, and I have a couple ideas too. We'll share probably at least 3 stock ideas here before we wrap up at the end. And used cars, you remember during COVID, because everybody was out buying these used cars, and there's supply chain issues, obviously, for new vehicles, so everybody's going to used vehicles. But in the latest CPI report that came out last Wednesday, used cars and trucks are now down 9.3% year over year, which is, if you take a look at all the components, one of the biggest drops of any component.
But that's probably in that report, that's probably the only thing that actually went down, right?
I have a few others I'll touch on in a second.
Okay.
But but what's interesting is, I remember watching CNBC and all the financial media outlets during COVID, because you're kind of stuck home. And they talked about when inflation was going through the roof, they kept blaming used cars. And it's kind of a small really component of the total CPI number. But what I find interesting, I'm going to bash the media probably every show, the mainstream media. They don't talk about used car prices going down, how it's actually really great now. It is more affordable now. There's a good chart of Tesla prices. Used Teslas skyrocketed in 2022. Now they've come down dramatically. So these are actually some good deflationary things that we're not looking at. A couple others real quick that came down here, Tim. Car and truck rental, toys down 7.8%, televisions down 6.6%, airfares down 5.9%, which I thought was pretty fascinating. New vehicles were down 0.8%, but still down. These are all year-over-year prices. I had a conversation, and I want to see if you agree with me, Tim, with somebody recently about inflation. And it was, one of those people that just bitch and moan about everything. I said, realize though, over the last 30 years, obviously prices have gone bananas, especially the last couple of years, but the deflationary things that happen. We have this iPhone that this computer 30 years ago would have fit in this boardroom right here and cost us tens of millions, if not hundreds of millions of dollars. And now we buy it for $1,000. What about televisions?
That thing replaces about 50 different devices that you would have had before. Yeah.
Yeah. It's just like people, I tend to forget that prices on a lot of things have come down and gotten better. Like you said, it gets better too. It's not like just prices come down. It's gotten better. And sure, there's shrinkflation, there's inflation. I get it. It's part of a growing economy. But I think sometimes, Tim, we have to take a step back and look at the big picture that prices are coming down in some areas. So, last Wednesday, did you realize that was only the 13th time since 2008 that we had a CPI reading and a Fed meeting on the same day? And I didn't read this till after the next day, which I should have read the day before. When I would have told you about it too, that the NASDAQ was up, I think, 88% of the time of those 13 times, and an average gain of 1%. That's a big one-day move. And what did the NASDAQ close up that day? 1.5%.
As we're recording today, new all-time highs in the S&P. I mean, you look at Apple. I mean, Apple's it's been up like 3%, like 4 or 5 straight days since their AI announcement. So, and I go back and I think I've told this podcast on this story on the podcast before, but I remember October 27th, we had a big conference. A lot of the listeners might have been there. There was like 800 people there. And if you look at the October 27th, the S&P would look like the bottom was going to fall out. It was looking really bad. And a lot of the speakers were, ringing the alarm bells, and they were right. Like you look at the chart, and the chart was breaking support and it didn't look good. And my presentation, I was the last one on that Friday because a lot of people were calling for Black Monday. And I'm just like, no. I'm like, listen, the stock market is completely disconnected from reality right now. Now, you can fight that and you can get angry about that or accept that. And I'm like, there's 10 speakers and everybody's saying sell. And I'm like, buy. Oh, I just did a Kramer impersonation. But anyway, if you look back to October 27th, the S&P has basically been straight up, not every day, but straight up as a trend from them and literally all-time highs today. And again, I'm curious what you think. I just think this is going to continue for quite some time as well. So,
I'm a long-term investor. Obviously, you know that, and the viewers probably are getting a good hint of that in the last few shows. But I'm also a trend investor. I go with the trend. The trend is your friend until it ends. And right now, the trend is up. I talked about this in a video I did last week for our new subscribers to the new service. And, if you ask a lot of people, they're going to tell you the stock market's not doing well right now. But like you just mentioned, we're hitting all-time highs. The one caveat I'll throw in there with this is within the S&P and the NASDAQ, it's being led, again, by these mega caps, kind of what we saw last year as well. These mega caps are really pushing it. Apple, NVIDIA, Microsoft. So if you took those out, the majority of S&P 500 stocks are actually lagging a bit. And our next show we're going to do, we're not going to touch on this, we're going to talk about the small caps, Tim. You look at small caps and like the IWM, which is Russell 2000 index, not near high. It's been pulling back. It's about the same level it was about 2 years ago. So you're seeing a bit of a divergence between some of the large mega caps and smaller ones. So I think sometimes people feel like they're not doing well. But that being said, Tim, most people have a lot of their money in their 401k that, even they're traders, they still have their 401ks. They're not trading penny stocks in their 401k. And they can probably invest in the S&P 500, right? So they're hitting highs. I mean, they're doing well. I mean, it's. I just can't fight this. We put out the new trades. We launched a new service, and thank you so much for hosting it. You did such a great job. We put out the new service on Thursday evening, so we're a day and a half into it. I updated. We did 3 positions, and they're all tech-related stocks. they're all up at least 10% already, and that's, again, we're long-term, but I'll take, heck, that's annual returns there for a lot of people. We're up in less than 48 trading hours.
Yeah,
so,
in a day and a half, no less.
Yeah. And again, the thing is, Tim, when I look at some of these stocks, do they look overextended in the short term? Yeah, they do. They do. Apple can't go up every day. NVIDIA can't go up every day. They do. But at the end of the day, if you look at the long-term fundamentals, a lot of them are still cheap based on levels that they've been historically at. And it's because earnings are growing so well. People look at price action, right? But why is the price action moving? Because earnings are growing. As earnings go up, it's okay to expand the multiples, meaning the PEs can go higher, the price of sales can go higher because you have such great growth at some of these big companies. And I don't see that ending anytime soon.
And that goes back to and again, like I do some long-term holds. Most of mine is swing trading. So just a few weeks, few months, not like real long-term holds. A lot of people ask, like my long-term holds are all in real estate. Okay. I basically put all of the decade-long stuff in real estate. But like, I just, as a penny stock trader, I'm so distrustful of the stock market that holding positions for very long gives me anxiety. But, I just look at so many people, like I think the reason people have this viewpoint is it's just that mainstream media. And I know that's kind of a theme that we're going to touch on a lot, but it's just so bad, man. It's like, I remember, I used to watch CNBC, when I was getting started, and I thought I was learning something. Like right now, I would rather watch Blippi. Okay, my nephews come over. You want to go insane, watch 20 minutes of Blippi, all right? But I seriously, I would rather watch, if you were you have to watch TV for 30 minutes, I would rather watch that than CNBC, because it's just it is the exact opposite of anything actionable. And they love fear. Like that's how they, if it bleeds, it leads. So that's why they're always pumping this fear stuff all the time, because they know that's what gets people to keep watching. And talking about optimism and good things and the stuff you just said of multiples expanding. I just think that the average viewer of this stuff, they want to hear bad news and they don't want to hear good news. They'll turn it off and their ratings go down.
If things are good, you're not tuning in, right? Okay, things are fine. I don't have to tune in. Or things are okay. And when people ask me about what my view of the U.S. economy is, I don't think it's great. I think it's okay. But I'll tell you, for many years when I was on Fox, the economy was okay. And during that time, it was a bull market. You don't need to have a booming economy. You obviously don't want an economy going into the shitter, but an okay economy, growing GDP at low single digits, inflation coming down between 2% and 3%, that's fine. That's a great situation for corporations, and they're going to continue to grow. And I see that's where we're going. Let me give you this real quick, this stat here, Tim. It's if you take a look at the CPI, which came in, the headline was year over year 3.3%. Monthly, it was flat month over month, and that was better than expected. But if we looked out, and let's assume that it remains flat month to month, and just assume this for a moment, month to month prints, we'll get back below the 2% target in the beginning of 2025. And as a matter of fact, by September, we'll be down to 2.04. So let's call that 2%. That's if we're flat. Now, say we assume, and it's not going to be consistent, I'm just putting numbers out there. Assume we have 0.1% month over month prints going forward. The 2% target gets hit in March of next year. So again, 9 months away or so. So in my mind, we're going to reach that 2%. And as we get there, what's going to happen? Fed's going to lower interest rates. It's going to happen. They might, I don't think they have to, but they will. And boy, oh boy, the market's going to, this is more fuel for this bull market.
And I've said this for probably 6 months now. If the election goes the way I think, holy crap, man, you better hold on. Now, the chickens will come home to roost eventually. But I just think it's going to be throwing gasoline on the fire. And then you look at the stats like you mentioned, things aren't as bad as you're being told, even though the world's in a mess right now.
Yeah, I mean, but we could sit here and we could do a show every day and come up with 30 reasons why the world sucks, right? We could do that. I mean, there's nothing's perfect, and But who the hell wants to live life like that, first of all, right? Who the hell wants to wake up and just bitch and moan every day? Just not my thing. But just one more thing that we should probably talk about, the stock ideas that we have based off the car prices. The next FOMC meeting, so next time the Fed meets, will be July 31st. Only 10% of a cut there. I think you and I are probably on the same page. We don't think they're going to cut there. September is when it starts getting a little dicey. September 18th is about a 60% odds right now of a rate cut. Go to November, it's about 76. We have a cut by November. December, you're close to 100% a cut by then, and about 2/3 chance of 50 basis points, two cuts by the end of the year. I'm just curious what your view is. I think we get one before the election, so I think we get one in September, and I think we could get one in December. So I think we have two by the end of the year, starting in September.
So, again, that's what I like about what we're doing is like, I'm in the weeds of the penny stock and you're the data guy. That's what I'm excited about what we're doing. So now I follow all this. Now my opinion, and again, I'm on the record about this, that I'm a big believer that the infamous they are going to use a rate cut right before the election as a political tool. Okay. They're going to be like, okay, the economy is great. We're cutting rates, and listen, they're free to do whatever. So I agree. Like one right before the election. And then again, kind of going back to what I said a minute ago, I mean, if the election goes the way I think, then I just think that there is going to be massive pressure from the administration. And again, whether it's right or wrong, to continue to cut, because the guy I'm talking about is a business guy, and if you build big buildings and stuff, you want low rates, okay? So I totally agree. I think that we're, and I said this last week, like a lot of people were asking, do you think they're going to cut? I'm like, no, it's too far away from the election. Like, they don't want to use that ammunition right now when they can save it for later. So yes, I wholeheartedly agree
and
with your
what's
timing.
crazy is, like you just mentioned, and I agree, that's what they're going to say. They're going to say, we're lowering rates, but the economy's great. Usually if the economy is great, you shouldn't have to lower interest rates. So it kind of flies in the face of what they're saying. But I agree. I think that's what they're going to say. But if things are good, you should hold off, keep that ammunition in your holster there, because why use it? Because if things do slow down, then we can use it. But again, I think September is almost guaranteed unless something dramatically happens. It's the last meeting before the election early November. So why don't you jump into Carvana, Tim? I know that's the one you're looking at, and I'll throw two more in when you're done, two more ideas.
Yeah. So like, again, and Matt's going to have his data, but, the cool thing is, like with Carvana, a lot of you probably remember, you go back to the pandemic, went on an epic run from $20 to 376, basically through 2020 and 2021. Now, a lot of that move I know this because I traded it and witnessed it. This was, for whatever reason, much like all the meme stocks. I mean, this was just a hated stock by basically every short bias trader everywhere. Like this one, for whatever reason, like I think they're pretty cool. I drive by a Carvana, I'm like, man, that's pretty cool. They got their little car vending machine, and like you just buy the car and they just drop it off. I'm like, this is cool, because nobody likes buying a car. Like, come on, like. It's an annoying process, but for whatever reason, just short sellers just hated this thing. And then you go back to last year. I mean, it was down to $3.55. Now, I think they all got squeezed. I mean, like, what's crazy about these short squeezes is everybody's crowing, for in 2020 and 2021 while they're getting smoked on the squeeze. But then you don't hear from them when the waterfall happened in 2020 and 2023 because they were early. Okay. And then you look at that, the dead low was $3.55 late last year. And this thing has just been trending up. And here we are at $100 a share, which is above, like, this is the technical analysis, like from the low price stocks. This is basically at the level at the start of the pandemic. So even though it went all the way to 376, all the way down to $3, it's back above the level where it took off back during the pandemic. So, and back at $100 a share from $3.55. Now, those same characters are back, and they're all saying this is a scam, and like saying it's a complete joke, etc. And when I look at the chart, now listen, I'm not saying it's going back to 376. You never know, but that was an incredible move fueled by the pandemic. But simply looking at the chart from a technical resistance and support level, this is back above those where it started the run. And if I think if this holds above 100, like you got a realistic short squeeze up to 200 plus. And then you look at the chart, the previous breakout level, you go back to basically March was 80, 90 bucks. And from a technical analysis and a trade perspective, I love that as a risk because with every trade plan, variables can change, anything can change. But I look at the chart and I'm like, wow, I really like this. If it can stay, above that 80, 90 level, then I really think the squeeze is in and this could retest again, I think 200. So in that trade plan, in that scenario, you're risking 10 to 20 bucks a share for a stock that has 5 times that to the upside. Now, as always, use a trailing stop. If it starts kind of petering out and doesn't hit 200, you would move on. But I just look at this and it just looks exactly like a penny stock short squeeze. And it really looks a lot like it did in 2020, 21. And I'm reading, kind of going back to where we started, I'm reading all these articles that people are, again, not buying new cars. Evidently, it's borderline impossible to buy a car right now. It's like there's all these, like my wife, again, like I'll probably get her another GX. Like they dropped that new model. She was at the dealer getting the free oil change, and she's like, they don't have any of them. I'm like, it came out a year ago, and she's like, no, they don't have any. They don't know when they're getting any. And so I'm like, I would be buying a new car right now, but I have to order it and wait a year. And I don't like doing that. I like to just go pick up the car. So, and then I saw Scott Adams, I follow him on Twitter. He said the same thing. Like he big following on Twitter, great guy to follow, the guy from Dilbert. Okay. But like he said the same thing. He's in California. He went to buy a car. He went to 4 different dealerships and like none of them had any cars. So he's like, well, I guess I'm not buying a car right now. So I think of those people, like think if you needed a car, like I don't need one. The wife's car's got 30,000 miles. I don't need a new one. But what if you needed one? You have that experience at the dealership. And guess what? In my opinion, you're probably driving over to Carvana or you're launching their app and you're buying a used car because you now need a car, like yours broke down or you gave it to your kid or whatever. So I like the squeeze combination. I love the chart. And I see all these articles talking about, the boom of used cars. So,
yeah, that's great insight. It's, I remember during COVID, we ended up buying a car for the one business I had. And I'm not a car guy, but I logged on to Carvana. I'd spend hours a day shifting through cars on here. It's insane. Like it's an addictive website and app too. But you brought up a good point that it kind of did a round tripper here, Tim, right? It's at the same price it was pre-pandemic. It went up, and then it came down 99%. It's pretty rare for a stock to come 99% and then go 30x from the low to today. I mean, that's some. I know you like penny stocks, and some of the listeners might be saying, "This is a $100 stock. This isn't for me." This is volatility. This is as volatile as a penny stock, in my opinion. This is some nut stuff. But in 2020, so you're taking. Let's look at 2019 because the pandemic hit right in the beginning of 2020. 2019, it did $3.94 billion in sales. Okay, we're at about the $100 mark. We're projected this year to do $12.45 billion in sales. So 3x, right? 3x more. Price is the same. The share price is the same level. So it did all that. But if it took away the pandemic and it just kept growing, this was probably a $200 stock. This is a double from here. Also, even more important is a company like this has struggled to make money. Well, they're on pace to be profitable in about a year and a half to the tune of $1.63 a share. And once you hit that, margins go up. EBITDA starts taking off. I mean, this is, maybe don't chase it here at 107, whatever it is, little pullback. But I do think there is a case for this company. And I love that it's hated, just like you do. I love that it's hated. That's probably my favorite thing about this company.
Now you mentioned so did you mentioned you had some other
quick
stuff?
Ones.
Did you, you want to drop
so I
that?
just did a little bit of research into just this auto and truck dealerships, and I looked at the charts over the last 3 to 5 years, and majority of them were down. They had a COVID spike and came down. I did find 2 big names though that actually held up really well and are up big still post COVID. One's the second largest auto dealer in the U.S., Auto Nation. Most people probably heard of that, symbol AN. Still not that big of a company, $6.6 billion market cap. What I found fascinating about this one was it looked at the fundamentals. PE ratio of 8.2, price of sales of 0.23. So that's about 1/3 of the market PE ratio, about probably 1/6 of the market price of sales. So based on the overall market, very, very inexpensive. The other one was Group 1 Auto, which is GPI, a little smaller, about a $4.1 billion company. But again, look at these fundamentals. PE 7.5, that's price earnings ratio, and price to sales ratio 0.19. So I thought to myself immediately, this is so cheap. Then I thought, okay, I better check myself here. So I went back and looked at the average PE ratio of these companies over the last 5 years. It's kind of in line where they are. They just trade cheap, kind of like utilities. So maybe, they've run up too much, but if you're looking at this type of area, Tim, I would kind of do like half Carvana, half one of these. Kind of take the little aggressive one and one of these other core ones that's held up.
Both very nice.
Yeah, the charts are good,
right?
don't they?
Like from a technician standpoint, just beautiful breakouts.
Yeah, it's tough to ignore the way the strength they've been doing. But yeah, just want to throw that out there if you're looking in this area, because you look at like AutoNation, bottomed in that March timeframe, 2020, pullback from COVID, but since then it's been kind of straight up. It's been kind of like the S&P. It's had a hell of a move.
Awesome. Well, thank you, sir. And everyone, and like I mentioned at the beginning, definitely drop us comments. Now, keep in mind, my friends, I know we have a lot of penny stock people, so Matt and I are going to be recording another episode for the next episode here probably tomorrow or the next day. But FYI, it's going to be all small caps. So I know you small caps people out there want some love. And listen, we'll wait for the next episode, definitely. But FYI, it's getting interesting in small caps, like that Stanley Druckenmiller headline. We'll talk about that in that podcast. But I don't know if you guys caught that a couple weeks ago. Like he crushed it on NVIDIA, and he's selling NVIDIA because he's like, I want in on small caps. So an interesting story there. So that being said, my friends, drop us a comment, like and share with your friends. And for all my penny stock peeps out there, keep an eye out for that next episode.